This is the session. It's a bit of a special edition of our APRA AMCOS Insights. This time we are joined by the wonderful Emma from Generate. And this is also being brought to you by all of the AMIN organisations. So there are your local organisations that look after kind of contemporary music in your state. So places like QMusic and Music New South Wales and MusicSA. So all of those organisations, lovely to have you all here. And thanks for bringing this session to life. This is called Tax Time Tips. Now, let me just start by, I'd like to acknowledge the traditional owners of the land that I am coming to you from, and that's the Wandjera people. And I'd like to pay my respects to their elders past and present, and also extend that acknowledgement and welcome to anyone who is joining us, our First Nations people. Thank you for being here. And a big welcome to everybody who's joining us from wherever you might be, whether you are around Australia or our friends over in Aotearoa or abroad. Lovely to have you with us, and thanks for coming along to this session. Hopefully it'll be a great help to you, because we know that a really important part about your careers and your life is having to do your tax. So always good to get some great advice from someone who actually knows what they're talking about. And that is Emma from Generate, who will be leading us through a great presentation. Now, in support of this presentation, there is a fabulous document that has been created between Generate and Music New South Wales, and that's the Tax Pack for Musicians, a really great resource, and we will be popping a link into the chat soon, so you'll be able to download and take that away, or just copy the link. The way these sessions run, for anyone who hasn't come to an Insights session before, we use the Q&A facility down the bottom of your screen, and that is a way for you to ask questions. Now, I will ask everybody to hold off on asking questions straight away, because sometimes we can get really eager and we want to put everything in there, but the chances are Emma is going to get to your topic pretty soon. She's got a very thorough presentation. Anything that you feel like you need to ask more about or more detail, please do pop it in the Q&A, and we will try to, anything we can answer, we will, or we'll come back at the end of Emma's presentation and do a little Q&A with her. Now, one thing that I will ask though is, because of the nature of this topic that we're talking about, tax, I know that it can be a very, it can feel like you want to ask a question that's very specific to your situation, and this really isn't the forum for it. I do think that if there's anything very specific to your needs and your situation, we would strongly suggest making an appointment with a tax accountant and getting some one-on-one advice. General advice, though, please do ask away. Now, I am going to step away and let Emma take over. Also joined tonight, is my wonderful colleague, Nikki. As usual, we are both here, and we'll be popping onto the screen later at the end. But Emma from Generate, I'm going to pass over to you to take the reins. Thank you so much for being here.
Very welcome. So let me get this going. Alrighty, so hi, I'm Emma. I've been working at Generate as a tax accountant for a number of years, for coming up to my 5th year anniversary. It sounds really boring, but I really enjoy tax. I really enjoy helping other musicians as well, being able to sort of come to grips with what this all means. You know, there's a lot of different concepts and a lot of different ideas and stuff that happen in the sort of tax setting that make, you know, as a musician, you might be like, what the hell is all this about? It's so outside of my realm of things that I think about on a daily basis. So that's why I'm here to go through it all with you. So on the agenda for today is, we've got the list down here. So we'll be talking Tax 101, you know, that's the different structures that you might have your business in. What's an ABN and why do you need an ABN? We'll be doing a nice big fat section on deductions. 30 June's coming up in a couple of weeks' time. What is deductible, what's non-deductible for you as a musician or running a musician adjacent business. We'll be talking about what pay-as-you-go installments are. We'll be talking about income averaging for musicians, foreign income and withholding tax and what that means, how to find your APRA income. This is an APRA sponsored webinar today, so we'll be looking at how to find your APRA income on the APRA website, and then we'll be talking about superannuation, how you can be paid superannuation and how you can pay yourself superannuation. So first of all, let's go to Tax 101. So what are the different structures for people to run their businesses through? I suspect that a lot of you run your business as a sole trader. So it's just yourself You've got your own ABN and you're running the business by yourself. So do you need to lodge a tax return? Yes, but you just lodge it as an individual. That can be through your accountant, that can be through MyGov. Very simple to do. You just do a separate business schedule in your tax return. And so who gets taxed on the profits that you make in your business? You as an individual do. Another common structure that we see, especially for bands that are just starting out, is a partnership. That's where 2 or more people will come together and have their own ABN for the band. We'll go with that example for the time being. And any profits that the partnership makes are split between the band members, and any losses that the partnership makes is split between the band members. Partnership lodges its own tax return. Often it'll have its own bank account and it'll have its own accounting software and all of that jazz as well. That's something that, like I said before, we find is very common with, especially bands just starting out. The final one that we commonly see is a company. So a company is a separate legal entity. It's a separate person for tax purposes, effectively. The company lodges its own tax return. Again, similar to a partnership, it'll have its own accounting software. It'll lodge its own tax return and whatnot. And who pays the tax on the profits? It'll be the company. So you earn all of this money. We have a profit at the end of the day, the company gets taxed that, rather than being pushed out to the individuals in a partnership or being paid by the individual themselves. So do you need to declare all of your business related income? Yes. So what sort of income is that? That could be, just from your general trading day to day, or, if you're a musician, when you're performing a gig and you send an ABN, send an invoice out to to the venue or something, all of those invoices would be included in your tax return. Any royalty payments that you receive from APRA, from Sony, from Universal, from other, royalty entities, across the globe, also included in your tax return as well. Any equipment sale, if you sold a guitar, for example, that would be, and that you claimed a deduction for in a prior year, when you sell that instrument, that would be income in your tax return as well. Can you claim a deduction for, a lot of things? Maybe, probably, maybe not. We'll talk about that in a second. You get the next slide up. Alrighty, so in order to run a business as a sole trader, you need to have an ABN. What is an ABN? So it's an Australian business number, and you need that if you intend to carry on a business within Australia. So carrying on a business means that you're wanting to make a profit, essentially. It's not a hobby. So if you're playing a gig every now and again just for the heck of it because you have a good time, because it's good fun to do, there's an argument to be made there that you're not carrying on a business, and this is all, I guess, null and void. However, if you are no, I'm a musician, I'm in a band, or I'm supporting, I'm a supporting person that supports a venue or a band or something like that, and, I do this so that I can make money and earn a living, then you're running a business, you need an ABN. They're really simple to get and they're free. So be wary of any places that are asking you to pay to receive an ABN. The website on the screen here is where you go and do it. You just fill out a questionnaire, but put in your personal details like your TFN, your address, your date of birth, just so that the ATO can match who you are to the ABN and whatnot. And then that's all good. It only takes about 10 or so minutes if you're quick and you've got all the information to hand to get that together. If you don't have one, there is a chance that the person who is trying to pay you may have to withhold 47% of your fee. So for example, if you were sending out a $1,000 invoice to a venue, your invoice didn't have the ABN on it, the venue could withhold 47% of that payment so that you only receive 53% of the cash, which would suck. So, getting the ABN is free. Like I said, why not get paid the whole amount, get the ABN, pop it on the invoice. So deductions. I have a feeling that this is going to be the thing that a lot of you are going to have some questions about. So what I'm going to do is have a nice big talk about deductions, go through in semi-detail what's deductible, what's not deductible. Then we'll pause to see if you've got any specific queries about what's deductible, you know, like if there's something there that I haven't covered off, and then we'll continue on with the presentation. So the main concept that the ATO look at is that deduction that is the expense that you want to claim necessarily incurred so that you can earn that income. There needs to be what's called a nexus between the expense, or a connection between the expense and the income earned. So if you know, for example, wanted to purchase a highlighter or something, you know, a random piece of stationery that you wouldn't be using in your business at all, then the ATO say, okay, well, that's not necessarily incurred, therefore you can't claim it as a deduction. But obviously there are a lot of things as musicians, especially, that are deductible that you may not think are, or, you know, something that you might not have occurred to you before. So the next slide is going to have a lot of those things on it, and we'll discuss in further detail. I'm just going to move myself so I can see these. All right, fantastic. Alrighty, so first of all, communications, your phone, your internets, your postages. So, you know, if you're using your phone in order to carry on your business, you're using your internet in order to carry on your business, then they are able to be claimed as a tax deduction to the extent that you use it for business. So for example, if you've just got the one phone that you use for your personal life and you use for your business life, then you would need to apportion it to the business use percentage and only claim that business use percentage in your tax return. How do you apportion it? Well, the ATO say that, you know, you can get your phone bill for a specific period, highlight all of the calls, for example, that are definitely business related, sum up all of the business related calls versus the non-business related calls. You'll get a percentage, and then you can apply that percentage for the year. It's a little bit fiddly, but it can be very worthwhile doing, especially if your phone bill's quite expensive and you use your phone for work a lot of the time. There is a shortcut method if you're like, this is too annoying. How am I going to be able to do this? And that shortcut method is basically a cents per hour rate. So that cents per hour rate covers costs such as your phone, your internet, some like other little home office things. It's called the home office allowance, basically, and it's 67 cents for 2024 financial year. It's 67 cents per hour that you're working from home, and that will cover your costs of your phone and your internet. You just need to be able to make sure, if the ATO ever ask, that you can prove that you were working from home from that time. So that's something like a calendar, you know, being like, okay, I've blocked out today, I'm working from home. Or I know that, you know, on Mondays and Thursdays I work from home, the other days I'm out and about. So those are the sort of record keeping requirements for that. So yeah, in summary, your phones, your internet, your postages, business use percentage, deductible. Then we've got some more sort of general deductions. So insurances, for your public liability insurance, equipment insurance, all of those sorts of things are deductible. What's not deductible is travel insurance. So if you're going overseas to perform some shows, for example, the ATO take the view that travel insurance is private in nature and therefore non-deductible because you're insuring yourself. That's the view that the ATO take, even though it's a cost that, you know, is necessarily incurred in order to run your business. The ATO say, okay, this is a specific exemption. You're not able to claim for it. Rent. If you run your business from home, there may be a chance that you can claim a portion of your rent. If you have a space in your home that's a studio, for example, you know, you have all of your amps set up, you've got your desk set up, you've got everything, you know, in place, and it's only a room that's only used as a studio or an office, for example, we can claim a portion of your rent against your income. So that how we do that, how we as accountants do that, is we would request a floor plan and we'd say, okay, what's the floor space of your office versus the floor space of your whole home? Let's say it's 20%. Alrighty, we can apply a 20% deduction to your rent expense. but that's only if your employer or your business does not provide another place for you to work. So for example, my work provides an office for me. I choose to work at home sometimes, but they have an office for me. I'm not allowed to claim rent, even though the space that I'm in is an office 100% of the time. If you're running your own business, then that could be different. You know, your business doesn't provide another place for you to work besides your home. Alrighty, you know, we can claim a portion of your rent. A lot of sole traders should have their own separate bank account for sole trader activities. Sometimes those will incur bank fees, you know, from the major banks and whatnot. If it's a bank account that's only used for sole trader purposes, those bank fees are deductible. Awesome. So equipment. So this is a common sort of thing that we talk about around this time before 30 June, because purchasing equipment before 30 June can give you quite a generous tax deduction, which can lower your taxable income, which lowers your tax bill. So if you're a musician and you're a guitarist in a band, you know, purchasing a guitar would be tax deductible up to $20,000. In the past, we used to be able to, you know, in the past years during COVID, we used to be able to say, okay, I'm going to spend even up to $100,000 on one piece of equipment, one instrument, you know, very expensive, but it's possible. And you could write that whole thing off. You wouldn't have to depreciate it. That's not the case anymore. You're allowed to depreciate one single piece of equipment that's purchased for $20,000 or less straight away in the year. Otherwise, it needs to be depreciated over its useful life. So if you purchased a guitar, you think, okay, I'm going to, you know, and let's say it was 25 grand, maybe it's a very beautiful vintage guitar. That guitar would be depreciated over the lifetime of the guitar. And the ATO have rates about, you know, what they think the useful life of those things are. If you ever have any questions, you can always look on the ATO website or ask your accountant, and they'll know what to do with that. Yeah, so things like your instruments, your amps, you know, computers, if you needed to purchase a laptop that you were going to use only for business, then that would be a deductible expense. To the point where it's $20,000, then it gets a little bit more complicated. Some sole traders hire employees and have people that work underneath them. So those are wages, super, any sort of, you know, workers' comp insurance, payroll tax, I doubt, but, you know, any of those sorts of things, all deductible. Any advertising advertising spend that you may have. So that might be like Facebook ads, Instagram ads, you know, printing posters and popping them up, you know, for a gig or something like that, or to advertise, you know, a new album that you're releasing or something like that. There's a direct connection there between that advertising spend and income. So it's deductible. Easy breezy. Other costs such as your advisors, so your managers, you know, oftentimes you'll receive an invoice for a show that you've performed, and your manager and your booking agent might have taken a percentage cut out of those, out of that income. Those are deductible. Those are necessary costs in order for you to run your business. Things like your accountants, your bookkeepers are deductible as well, because, you know, you need somebody to prepare your tax return for you. You need somebody to keep your books for you. Otherwise, you can't run your business. It's deductible. Lawyers are a little bit more finicky, a little bit trickier, in that depending on what they're advising you on, it may be deductible, it may not be deductible. Basically what we have a look at is the thing that the lawyer tried to do going to help me with enduring income? So oftentimes, you know, you'll have a lawyer look over a contract for, you know, maybe a 5-year publishing deal or something like that. In those cases, those legal fees would be amortized, or you wouldn't be able to claim them all in the one go. We'd have to claim them over a couple of years. Travel. So, you know, oftentimes you'll be moving around heavy equipment, moving around gear, traveling to a gig, traveling back from a gig. If you're doing that in your own car, there's a couple of ways that we can go about claiming deductions for those. The first way and the simplest way is just keeping a log of how many kilometers you're doing. So but what's also really important to note is travel from home to a regular place of business is considered private by the ATO and therefore non-deductible. So if you're traveling, you've got a place, let's say you work at the Opera House, and so you're going from home to the Opera House and back again, every day, that travel is considered non-deductible. However, if the Opera House say to you, hey, can you go and, help out with something on the other side of Sydney? Travel from your home to the other side of Sydney and back would be tax deductible. So what you would need to do is keep a log of how many kilometers that you travel, and then you can apply a cents per kilometer method similar to the home office allowance, and that will and then you can, claim the deduction on cents per kilometer. The other way is by keeping a logbook. This one is a little bit more annoying, but it provides a much better tax deduction. So if you're driving around for business, heaps and heaps and heaps, you've got your own car, you're paying your rego, you're paying petrol, which is a gazillion dollars these days, or, you're paying your insurances and whatnot. If you have a logbook, then you can provide the percentage that's business use and apply it to all of those costs. So for example, what you would need to do is keep a logbook for 12 weeks. This is the bit that's a little bit of a pain. You keep your logbook for 12 weeks. You say, okay, here's all my business travel. Here's all my private travel. What's the business percentage? And then you can apply that percentage to your petrol, to your rego, your insurance, your repairs, your servicing, car washes, all of that sort of jazz. So you can have that logbook as well for 5 years. So it's a small time pain for potentially a lot of tax savings, especially if your business use percentage is quite high. Then there's chance to make a huge tax saving there, which is awesome. Alrighty, so if you're going on tour, if you're incurring costs for flights, accommodations, taxis, and all of that sort of stuff, those can be tax deductible expenses to the extent that it's business related. And what I mean by that is that if you're going over to Europe for, let's say, a month, but you're only playing shows for 2 weeks, then 50% of your flights would be deductible. Only the accommodation in the places where you were actually performing would be deductible. It's all got to come back to, what's private and what's business. And so, the ATO always want to see that distinction. And the way that they do see that distinction is by having a travel diary. So when you're going overseas, just keeping note of this day was a travel day, this day I was a work day because I had a show that day, the next 3 days I was relaxing, on the coast in Mykonos somewhere, having some time off. All right, then I got on a flight to Spain and I did some more shows. Keeping that all together will provide evidence to the ATO if they ever do ask that those costs, which can be quite hefty, are business related. Alrighty, so clothing and makeup. This one is a little bit of a grey area, and that's why I've got the question mark there. If you are purchasing clothes that, just like a black t-shirt or, just general clothes that you're going to perform in on stage, the ATO will likely take the view that that's non-deductible. They'll see it as that it's too private. Yes, maybe you purchased it to wear on stage, but you could wear it off stage as well. And, so that the business use percentage might only be like 0.01%. And they say, no, it's not going to work. If you purchase some clothing, for example, that's only going to be worn on stage, it's been necessarily, if you purchase like a spangly jumpsuit or something that you're only ever going to wear on stage and you're never going to wear it anywhere else, then the ATO say, okay, maybe it is tax deductible. It's the same with makeup and sort of hair costs as well. So if you, purchasing, clown makeup or something like that, for example, that you're only ever going to wear on stage and you're never going to wear in your private life, then chances are it's deductible. If you're just purchasing a foundation, just a regular, or regular mascara or something like that, for example, the ATO may take the view, no, it's too private, it's not deductible. With haircuts, for example, I often see people say, oh, I had to go get a haircut for a hair shoot, for a photo shoot. As long as it's, that's usually fine. Ongoing costs of getting your haircut so that you're, just looking nice, so that everything's like all good and whatnot, non-deductible. But if you incurred that cost specifically for a photo shoot, for example, where there's like an actual business thing that you're doing, the ATO take the view, oh, okay, probably it's deductible. Education costs. So these are things like, if you're trying to learn how to play the keyboard or the guitar or something like that, or you're trying to learn how to use Pro Tools or something like that, and you pay somebody to do that for you. If you're already a guitarist and you're taking guitar lessons, yeah, it's probably deductible. If you are a keyboard player in a band and you're taking guitar lessons so that you can, start a side project where you're playing guitar, because you haven't earned any money, or, there is like nothing sort of come through yet of you being a guitarist, the ATO say, okay, there's no link between your expense of the guitar lessons and the income, because your income is as a keyboard player. So therefore they would disallow that deduction. Things as well, like, if you take if you're performing on stage and you take general dance lessons, just so that you have a bit of stage presence, so that you don't, not fumbling around like Bambi on stage, too general, the ATO will say that that's non-deductible. If, however, you are, having one-on-one sessions with a dance instructor because you're going to be doing a specific performance on stage, then that'll be deductible, because there's a link there between your income and the deduction. Final thing here is, the things that aren't deductible, that even though they may be incurred while you're in business, the ATO say, I don't mind, like, I don't care, it's non-deductible. First of all, entertainment. So this is where maybe, you and the band go, finish practice, and you go out and go and have dinner, and you're discussing business things, and you go to the pub and you have a beer, you have a schnitty, and, you might be discussing important business matters. But the ATO say, no, that's considered meal entertainment and therefore non-deductible. You might be taking a prospective client out for lunch or for dinner or something like that. And although it's, by paying for that expense, you might be getting business in the future, the ATO say, no, too bad, because you took somebody out to dinner, it's considered entertainment, therefore non-deductible. Same sort of situation with fines. Oftentimes, I've seen so many times where bands have had to park really quickly and illegally out the back of a venue to get all of the stuff out of the van and into the venue, and the parking inspector's been like, oh, well, here you go, here's a parking fine. Fines are non-deductible. So even though, it was incurred in the course of business, and although a shame you got a fine, part of business, the ATO say, no, unfortunately, that's non-deductible. So let me know if you've got any questions. Pop them in the Q&A and we'll go through them. We'll pause here for a moment, and then we'll continue on afterwards after we've discussed any of your deduction questions.
Emma, I was just going to thank you. There's not actually, we only have one question at the moment about this. So I don't know if while we're talking, anyone else will pop something in here. Yep. Okay, they're coming through. So, are the costs of recording, producing, and distributing a single or album tax deductible?
Yes, if you're in the business of, recording, you're a musician and you make, you make records, then yeah, that's tax deductible.
Great. Now we have another question. Ryan has said, are gigs deductible as market awareness and research? I think you might have.
So do you mean, Ryan, that...
I think attending gigs.
It's a bit of a grey area. Yeah. From a person-to-person point of, perspective, there's absolutely a link there between, getting yourself out there and, advertising, yourself as a musician, or even doing market research and, reference and research, which are, deductible expenses, but you have to apportion it of it to sort of business wise. So if you were going to a gig that was 100% market research, you know, I just want to see how these people, you know, run the shows and whatnot. Like sounds harsh to say, I'm not getting any enjoyment out of this, you know, this is purely business related, then yeah, there's a leg to stand on there that would be tax deductible.
Great.
But you know, it's a bit more difficult if you're like, oh, you know, this band that I really like is coming to town, and you know, I draw inspiration from their music. There's a little less of a, you know, it's a very gray area. But yeah, in theory, reference and research materials are deductible.
Okay, thank you. We have questions. So there's a couple of questions that are probably, I think, have kind of been answered already. There is one here that I think is really important to address. James has asked, are these deduction rules the same in New Zealand?
I'm an Australian tax accountant, so I can't speak for New Zealand, unfortunately. From my extremely anecdotal, and this is not tax advice, sort of what I've seen is that, you know, in a lot of countries, the general principles are the same. You know, I can't talk to any specifics about, you know, if reference and research, for example, is, you know, specifically excluded in New Zealand, but generally speaking, a lot of these things tend to be across the board all over the world. You know, if it's incurred if an expense is incurred in order to you know, run your business, then it's probably deductible. But yeah, like I said, no information specifically to New Zealand, unfortunately. Sorry about that.
No worries. Thank you. There's a question here that's a little bit, it's an interesting one. It's a bit complicated. Mark has asked, obviously, when you're paid royalties, the usual split arrangement is that the publisher gets 50% and the composer gets 50%. Mark has asked, can the composer claim the publisher's share as a business cost?
So the way that would work then is that, you know, so you could claim the publisher's share as a business cost if you're returning income 100% of the royalty. So as you just said, you know, let's say it's $1,000 royalty that came in, 50% would go to the composer, 50% goes to the publisher. In your tax return, in order to claim the composer's costs, the publisher's costs, you would need to return the $1,000 as income and then offset it with the $500 publishing expense, which would leave you with $500 royalty income that's yours. But if you can't, if you're just claiming the $500 worth of income that's yours, you can't claim the composer's part of that, because otherwise you'd be double dipping.
Fabulous. Thank you. Julianne has asked, are refreshments deductible? And I think you might have mentioned this before about buying drinks.
Yeah, so the short answer is it depends. If you were, you know, you're on tour or something, and you know, you're on tour, you're away overnight, then there are going to be certain meal costs that are that'll be deductible. And there's also costs as well as that if, you know, you're bringing, you know, you're all out all day on a shoot or something like that, and you purchase coffees for the crew, you know, just to so everybody's caffeinated, everybody's happy and whatnot, then that can be deductible. But it's the costs where you're going out to a place, you know, to a pub, to a restaurant. Usually when there's alcohol involved, it sort of straight away says, no, probably not deductible. Excuse me, probably not deductible. But yeah, so it's a bit of a case-by-case basis, unfortunately. But yeah, generally, if there's alcohol involved, no. If there isn't alcohol involved, then, you know, maybe a bit more of a grey area.
Well, there's also another question, which is when you're on tour.
Yep.
It's a very vague question, but basically, if you're on tour, what's deductible? So I guess that's sort of, yeah, when you're away from home and you're on tour, what can you claim?
Alrighty, so, you know, your flights to get to wherever you need to go, your accommodation to stay there, if you're away overnight, meals, you know, because your work, even though it might be yourself, your work is sending you away. You know, you don't have access to your fridge and your cupboard at home. So meals would be deductible. You know, your costs of your Ubers to get from one place to another place is all deductible. Little incidental things that you might need as well, like, oh, I need an adapter, like an international adapter or something like that. That would be deductible as well. That's not to say that like literally every single thing that you purchase while you're away is going to be tax deductible, but it's, yeah, I see a lot of the times it's those costs that are your flights, your accommodations, you know, your meals if you're away overnight, your little incidental bits and bobs as well that will be tax deductible if you're on tour.
Fabulous, thank you. We also have a question about, we have talked about the claiming a portion of your rent. Can you also claim a portion of your mortgage repayments?
No, unless you want to pay capital gains tax on your when you sell the home later on. So I tend to, you know, obviously everybody's scenarios is different. But generally speaking, I always try and avoid claiming a portion of your mortgage payments. And the only part of that mortgage payment that you would be able to claim anyway would be the interest, not the actual repayment of the loan itself. But that can create complications when you later on sell your house down the line. If your home is the only place that you ever lived, you get what's called, you get the main residence exemption, which means you don't pay capital gains tax on the sale of your home. If it's being used for business, then there could be a portion of the sale that's eligible for capital gains tax, and why pay capital gains when you don't have to? So again, everybody's situation is different, but probably not.
Cool, thank you. We have a question about claiming for books, cinema and streaming for songwriting creative research.
Again, we would need to determine what the business use percentage of that is. If you've got Disney Plus or some streaming service, for example, and you're only ever watching shows that are for research, and I'm not sure how, but if you can sort of prove somehow to the ATO that, like, look, here's the inspiration from this show that I watched, here's it in my work, then yeah, that would be tax deductible. However, if you've got a streaming service and you watched one show and that was for that was for reference and research, and then all of the other shows and movies that you watched were for entertainment, then we would have to apportion those costs. Books are a little bit easier because you can be like, all right, I bought this book, to learn how to play an instrument that I already know how to play, sort of thing. So that, that's a lot easier to determine, but streaming's a little bit more difficult. But yeah, but your Spotify costs, your Apple Music and stuff, a portion of that can be deductible to the extent that you're using it for reference and research.
Great. There's a lot of questions here, so I'm just going to. Do you want me to keep going with these for now? What do you think? We're going okay for time, I guess.
Yeah,
Nikki, what do you think? What do you think, Emma? Are you feeling like we can keep going with some of these?
Yeah, I'm happy to. If everybody else is, we can knock the most of them over, and then I can get into the boring stuff later on.
Cool. We've got a question about is the procurement of merchandise to sell for profit tax deductible?
Yeah, absolutely. Right. Because otherwise you wouldn't be, if you didn't purchase the, let's say, t-shirts, if you didn't purchase the t-shirts that you would then go and screen print to sell, then you would never be able to sell anything. You wouldn't make any money. So absolutely deductible.
Fabulous. Can you tell us what type of insurance products are deductible?
Yes, so if you've got insurance out on your equipment, if you're going on tour and then something gets lost, you're like, okay, I've got all of that covered, then that's fine. Public liability insurance, some venues require artists to have public liability insurance. You would only have that if you were doing that show or if you were performing, so that's fine. Other ones that I can think of off the top of my head, business insurance, there's just sort of general business insurance that would be deductible as well. The thing that really sticks out that's not deductible is, if your home and contents insurance, if you're, it's too private, even if you store all of your stuff at home, probably, a portion of it, we could apportion it for your, like we do with the rent. And apportion it that way. But generally, it's not deductible, and your travel insurance is not deductible. I've talked to the ATO about that, been like, but we need it, and they say no. So it's your travel insurance that's not deductible.
Great. You really do know all of these answers, don't you, Emma? There is a question around, is there a minimum income threshold at which you can make these deductions? For example, if I only make a few hundred in small gigs or APRA royalties per year, am I still eligible?
Yes. So if you're running a business, even if your business makes no money, like it makes literally like $0, but you can be like, yep, I am running a business, then these costs are deductible. Where the kicker gets in is that the ATO can have sort of cottoned on to be like, oh, okay, so you're incurring all of these costs, but you're never making any money. That doesn't mean that that lets us assume that your business has made a loss. There are a couple of hoops you have to jump through in order for that loss to become a deduction on your tax return to offset the rest of your income. Won't get too detailed into it, but yeah, if your business makes a loss, then you'll need to pass a couple of tests to make sure that that's a legitimate loss. Okay, it'll either get carried forward or it'll offset your other income. But yeah, sometimes you just have a year where COVID happens and you don't make any money. That doesn't mean that you weren't running a business during that time. You just had an unfortunate year and you didn't make any money. That's all totally fine.
Great. Okay, lots of questions. There was, a question. Ryan has asked, there are a few grey areas with each of these deductions. So what do you need to prove or clarify? So is it upon submission of your tax return or only upon being audited that you have to explain it?
So you got to have receipts for everything that you're claiming. So it's up to, if you've got like digital receipts, physical receipts, or anything like that, you need to have them stored away for 5 years. Your logbook, you need to have for 5 years. The sort of piece where it comes in with the grey areas about the business use percentages and whatnot, your accountant would probably ask for, okay, do you have any proof essentially that, okay, this is, 50% business related, for example. But at the end of the day, it ultimately falls on the individual. You need to, you don't submit any of that information to the ATO when you prepare your tax return, but you need to have it on hand if the ATO ever audit you.
Fabulous.
So it's always good to have on hand, filed away in a desk somewhere, gathering dust, just so that in case that, if the ATO randomly select you one day, which they do sometimes, they do spot checks, that you've got all of the evidence and all of the proof there to say, yes, I did actually incur this expense. I wasn't reimbursed for it. Here's the business use percentage. There you go.
Fabulous. I feel like we might need to collate some of these questions together and let you continue on.
Okie dokie. Well, we can discuss
and
some
we'll
of
do
those.
our best to pull together some questions and get you to answer those at the end.
Not a problem at all. Alrighty. So that was the exciting bit. So hopefully the rest of this will, will still be exciting as well. Alrighty. So tax installments. So oftentimes you'll find that, in the first year that you make a profit as a sole trader, you'll have a big tax bill. And you get that because you've received 100% of your income and you've not had any tax installments withheld against it. When you're an employee, for example, you have gross income of $1,000 and then tax withheld of $200, so that when you lodge your tax return, the tax has already been paid for you. You don't have to do anything. Not the case for sole traders. So what the ATO do in order to mitigate, sort of smooth out your cash flow and whatnot, is say, okay, based on the prior year's tax return, I'm going to assume that you've had the same sort of year. All right, that means that every quarter I'm going to charge you a certain amount of prepaid tax. So, you might pay an amount in September 2023 that'll sit on the ATO as tax that you've already paid. When you go and you lodge your tax return, that'll be used as a credit to offset any tax liability you might have. So if you've paid too much in installments throughout the year, the balancing amount will be refunded to you. It doesn't sort of go away and then get lost forever. It stays on the ATO until you lodge your tax return, and then it's balanced out. So yeah, like I said, you might get a refund for any installments that have been overpaid, or you might have to pay an additional amount if the installments don't cover your tax liability. Oftentimes you'll see that, you know, maybe in the 2022 financial year, you had a really fantastic year, you know, you got an album advance, you returned all of that income, you had a big tax bill. But next year, you're actually recording the album, you're not touring, you're not earning any money, you're incurring all of these costs to record an album, but you haven't earned any money. The ATO will say, oh, you had a great year last year, we're going to assume you had another great year this year. There is capacity to vary those installments. So you can say, look, I know I'm not going to earn anywhere near as much as I did last year. I'm going to pay less tax now because I know that it's not going, like, I don't want it to be sitting on my account for it to get refunded later. I'd rather have it in my pocket now. You have to be careful with doing that though, because if you vary all of your installments down and then have a big tax bill at the end of the year, the ATO can have a problem with that because they haven't received their slice of the pie, or they've had to wait for their slice of the pie when they shouldn't have, essentially. So always sort of be wary with those. I know the pay-as-you-go installments can be a little bit annoying, that you're prepaying your tax. A lot of people would rather pay it all in one go later on, but it does sort of even out the cash flow of having, you know, of not getting a really massive tax bill. And it's just the way that the system works here. So it is what it is. Alrighty, so I'm special. What's all this about? So musicians are considered special professionals under tax law, meaning that they're eligible for income averaging. This seeks to smooth out your breakout year by averaging the income you pay averaging the income you pay tax on the smaller years prior. So what that means is that, you know, when you have a really big year, like for the example we had before, you get an album advance, the next couple of years you are recording the album, you're not touring, you know, so you're going to have a really big tax bill one year and then no tax bills in the other year. Income averaging seeks to sort of smooth that out so that you don't have such a hectic year one year and then nothing the next years. If you think that you're eligible for this, it's best to get in contact with an accountant, specifically one that deals with musicians and creative industries as well, because they'll know about this. Not every accountant knows about the income averaging because only a select group of people are. So it's musicians, it's sports people, it's some film people as well, authors are able to use this income averaging system. And we have to apply that from the first year that you were a musician. So, you know, if you've been trading as a musician for the last 10 years, haven't put in for special professional or anything like that, and then decide, oh, maybe I should go ahead and do it this year, we would need to go back 10 years and amend those tax returns from that first point. So it's really good to get in there early from when you first become a musician for tax purposes, I guess, and when you're running your business as a musician, so that, you know, especially in the first couple of years, you can see the tax benefits of that smoothing out of income. Like I said, if you think that you should be eligible for this, then reach out to your accountant and they should be able to look into that for you and see, okay, how are we going to go about doing that for you? Alrighty, so international tax. So international tax is really complicated. Every country has different rules about what's deductible and what's not deductible, but they also have different rules about how much tax that they're going to withhold from you. So if you're performing overseas, you'll likely have obligations to file a tax return in that country, and there may be tax to be paid in that country. You can use that tax as a credit back here. So what that means is that, you know, you might be performing a show in Germany, for example, your fee is $1,000, but you only receive $800 because the booker is kept $200 that's going to be tax paid to Germany and paid to the German tax authorities. That credit is then used in your Australian tax return. I'll tell you now. So that withholding tax is when so when you have to pay your overseas tax, if you're an Australian tax resident, then you can use that tax credit to offset any other, you can potentially get that refunded. best to talk to an accountant if you think that you're in that position, because, you know, there are a couple of rules that you have to sort of go around about how much of that credit you can claim. But the reason being is that as an Australian tax resident, you need to declare your your worldwide income. So even though you've performed a show in Germany, for example, and the German authorities have taken a slice of that fee from you, you need to declare not the $800, which was the net amount you got paid, but you need to declare the $1,000 for the show. But then you'll have that $200 credit that says, well, hey, I've already paid tax overseas of $200, so reduce my tax bill a little bit because I've already paid some tax overseas. Again, if you think you're in a position where that's happened to you, best to talk to an accountant within Australia, just so that you can make sure that you're getting any credits back that you are eligible for. Alrighty, so how do we find your APRA income? So as you'll be aware, APRA income, is if you're running a business as a musician, is taxable to you, and it's taxable in your personal name. So what you'll find, you know, if your accountant, you know, might ask like, oh, hey, can you send me your APRA statements for the year? And if you're like, oh my gosh, where is it? This is how we find it. So it's in the royalty statements and remittance advice. So at the top of the portal, you'll see these icons here. I really like the payment summary because it just says in one simple little thing like, oh, okay, this is how much APRA income you earned in the year. This is how much withholding tax you've had in the year as well. That's really handy. And this slide should show you exactly how to find it. So yeah, so you go into your tax residence, put Australia or New Zealand, pop in the period that your accountant's asking for, and then hit export basically, and then you'll see exactly how much APRA income APRA AMCOS income rather, you've earned in the financial year, which can be really handy for your accountant like myself. Alrighty, so last little piece that we'll talk about is superannuation. So if, you know, as you may or may not be aware, sole traders who are paid mainly for their time are considered employees for superannuation purposes. You might be sending out an invoice for your time or something, and you might be a contractor, you're running as an ABN, but for the purposes of the super legislation, they say, no, you're an employee and you should be having super paid on your behalf. This is basically a thing whereby, you know, the ATO and the government recognize that contractors often, you know, won't have any, like, although they've been working their whole lives, you know, basically 9 to 5s or, you know, 40 hours a week their whole lives, they'll get to retirement age and have very little super because of the way that their business was structured. So this sort of aims to redress that balance a little bit. Especially as well if you're a musician or if you're somebody who's aiding in a live performance, even if you're only being paid for like a, you know, a couple of hours work here or there, you will still likely should have super paid for you. So it's always really handy in order to make sure that your super is paid on your behalf. If you think that you should be getting paid it, you know, having your superannuation details on your invoice, separating out, you know, here is, you know, my fees $1,000 plus super, that's the net amount sort of thing. So you've got to, if you can spell it out really, really clearly, that'll sort of also jump in the person who's paying you's mind as well of like, oh, okay, actually, I've got to pay them super. So if you make it as easy for other people as possible, then that'll all be fine. The last sort of thing is that you can actually claim a tax deduction if you pay into your super. So if you're earning income as an individual or a sole trader, then you can make a personal contribution from your after-tax money and claim a deduction for it. What you'll need to do is stay under the relevant income cap, the contribution cap. So for this financial year is 27.5%. For next financial year is 30 grand. So you can contribute up to $27,500. It's taxed at 15% in your super fund rather than at marginal rates in your individual tax return. So what I often see people doing is saying, hey, you know, I'm looking at a big tax bill. How can I reduce this? And a way of doing that is by contributing to super. So you use your after-tax money and you send it to your super fund, making sure that it's accepted and received into your super fund before 30 June or by 30 June. If it goes in, if you send it on the 29th of June, for example, but it doesn't hit the super fund until the 1st of July, then you won't be able to claim the deduction for it in this financial year. And then you send that off to your super fund and you provide them what's called a notice of intent to claim. So that's a form that you send to your super fund that says, hey, I've just given you some money. Please tax it at 15% so that I can claim a tax deduction for it in my personal tax return. Now, everybody's going to have a different amount that they're able to contribute. So like I said, the cap across the board is $27,500 for this financial year. But we also have as well what's called the carried forward concessional contributions, whereby if you did not contribute the full amount in the previous 5 years, you can make a top-up payment, and that can be deductible in your tax return. Again, you need, if you're making a contribution from your, just from your money, you need to lodge the notice of intent to claim form with your super fund. It's a really simple form just to fill out. It's very easy to find on most super funds portals, or you can just download it from the ATO and send it into your fund. Excuse me. And then once that's been accepted, that instructs your super fund to tax that at 15% rather than 0%, so that you can claim it in your personal tax return. That notice of intent to claim form has to be done and accepted by the time that you lodge your tax return. Otherwise, the ATO won't allow the deduction. So we've reached the end of my ramblings here. If you've got any questions, pop them in the chat. We'll go through them.
Oh, there are many questions. There are many, many questions. So maybe whilst we are, there's a super question here, which I'm assuming is about superannuation. If I'm hiring a session guitarist for 2 hours of recording, am I supposed to be paying them for super as well? I thought it was only when the same person was paying that sole trader over a certain amount per financial year.
So there was a rule a couple of years ago where if you were paying somebody less than $450 a month, then you didn't have to pay super. That's no longer a thing now. So even if you pay somebody $40 and you determine, oh, there should be super on it, then you've got to pay. Then you've got to pay super. The ATO have a really good decision tool, basically, that's, allows you to put in your specific circumstances and say, okay, is super going to be payable on this? What is sort of prudent to note as well is, the sort of overarching thing for musicians getting super paid for them is only for live performances. So if you're hiring a session musician to be, to help out with a recording session or something like that, that's not a live performance. And so then we would have to have a look and see, okay, are they being paid an hourly rate until you get the job done, or are they being paid a set amount to record a certain thing? If they're being paid an hourly rate and they'll keep getting paid that hourly rate until the job gets done, probably super is payable. If you're only paying somebody for, I'm going to pay you X amount of dollars and that's how much it's going to cost, doesn't matter how much time it takes, then it's potentially more likely to be a contractor. Again, have a look at the ATO decision tool. I just Google ATO superannuation decision tool and it'll go through exactly everything with you.
That sounds helpful. You may not be able to answer this. Someone has asked, do you have any advice on the best super funds for musicians?
Absolutely not, because I'm not a financial advisor, so I don't, unfortunately. I do know, though, that the ATO, I think it's the ATO, have a comparison, and they have or some government, like Australian government agency, have a comparison website where you can see which super funds have been performing well over the past couple of years. Generally speaking, I think I won't, there's much of a muchness, it seems to be. But yeah, no, I don't have a preference, and I wouldn't be able to tell you even if I did, because I'm not a financial advisor.
Totally understand. We have a question. Should super be applied when applying for grants?
How does that? I'm not really sure. So what sort of grant are you applying for?
So I guess if it's payment, yeah, no, that's a good question. So it's probably a little more complex than, yeah, okay.
Yeah.
Nikki, I'm thinking maybe there's a couple of questions we might try to pull together from some of those. There are a lot of unanswered questions in here. So this will often happen in our insight sessions, but not usually to this extent. We're not going to get to all of these because we may be here all night long. So, Nikki, what do you think?
Okay, so look, I have been able to group a few of these together. We've had a few questions that relate to deductions around local gigs.
Okay.
So, for example, transport to and from, can we be claiming the car, the petrol, things like that, if it's within your local area?
Yeah, so if you're bringing, for example, you know, I've got this massive friggin' orange amp here. It's so heavy. It's so annoying to carry everywhere. If I need to take that to a gig with me because that's outside of, you know, I'm carrying extra heavy equipment and whatnot, then you can claim a deduction for the either, you know, in your own car, either the kilometers that you're traveling in order to get this massive amp from one place to another, or if you've got a logbook, then you can claim the petrol, the insurance, all of that sort of jazz as well.
Excellent. And of course, then traveling interstate, if you go interstate to work with a co-writer or a producer, you can claim your hotel and your flights. I'm pretty sure you covered all of that.
Yeah, absolutely. Perfect. To the extent that it's business related again. So if you're traveling interstate for 1 week, but you're only going to be doing 1 day's worth of writing, then only 1/7 of those costs will be deductible.
Perfect. And then this was a good one, and I'm sure it comes up a lot because it would be expensive. What about feeding the band during unpaid rehearsals? So you've all gotten together at the drummer's house because no one wants to move the kit, and you ordered 30 pizzas. Can we deduct the cost of those pizzas?
Potentially. We'd have to look at the sort of specific situations, and that would be like, okay, is the drummer's house the place of business? In that case, potentially it could be deductible. But there's also, you know, it's a sort of thing of like, we have to look on a case-by-case basis, especially with musicians as well, whereby, you know, you don't have a fixed office 99% of the time. You know, you might have a practice space that you go to once a week. Is that considered your principal place of business? If I was being a conservative person, and as accountants, that's what we should be, then I would say, you know, probably not, because it would be just like have the cost of, you know, having your dinner. Like I can't claim my you know, my dinner if I'm working, sort of thing. But potentially, you know, if it's considered a place of business, it may be deductible. I know that's not very conclusive, unfortunately, but yeah, you know, reach out to your accountant to triple check.
Yeah, I think that's going to be the case with a lot of the questions we've got, actually. But just ploughing on, education and research was another kind of grouped topic. So things like you were saying that you can deduct lessons. So if I play guitar and I want to get more lessons to improve, how does that work though if you are a multi-instrumentalist? Can you claim for all the different instruments?
Yeah, absolutely. So yeah, if you're in a band and you play multiple instruments and you need to, you know, be fine-tuning your craft and whatnot, then yeah, that's fine. You can, you know, I doubt that there's the one, you know, a lesson for multi-instrumentalists. You know, you'll have to go and get guitar lessons, get bass lessons, get drum lessons. So that's all fine. As long as you can prove like, hey, on stage I am a multi-instrumentalist and I play guitar and I play drums and I play keyboards and I need those lessons, then that would be fine.
Would you say it's a fairly safe general kind of rule that it's really tied in with your income? So if you're earning income from whatever you're doing, then it's possible that the deduction would be applicable.
Absolutely. So if you're, you know, costs for maintaining your skill set is deductible. That the ATO don't have a problem with that at all. The ATO start to have a problem when you are claiming costs for business ventures or types of things that you're not currently doing, that you're looking forward to be like, oh, okay, I might get into the, you know, I might get into the mixing scene or something like that. I want to learn to become a producer, but I'm not a producer at the moment. The ATO would say that those costs aren't deductible because there's no link between the income that you're currently earning and the expense.
Excellent. And then when it comes to research, now we talked a little bit about concert tickets and things like that. I know that as APRA AMCOS workers, this is a contentious one for us. But if you go to see a concert because the style of that particular performer is very close to yours, can you consider that research and deduct it?
Yeah, potentially.
Okay.
Yeah.
And what about if you are exploring a particular genre of music, maybe Indigenous music or Celtic music? Is everything related to your research, like physical items, any travel, any books? Could you claim any of that if you're still just kind of researching a style?
If you're already in the business of doing, you know, the ATO aren't going to be so like genre specific, being like, oh, you play rock, but you're going to, you know, heaps of like electronic shows or something like that, because you're, you know, that's, you know, that's, you know, it's a different genre. No, it's not going to do that. Like, I haven't seen that with the ATO. You know, if you're in the business of writing music and creating music, and you go and explore a different genre, and it is reference, and it is, you know, genuinely reference and research, that's why you're going to the show, then there shouldn't be a problem with claiming it as a deduction. But you've got to be able to sort of prove to the ATO, if they ever do ask, of like, okay, I went to this show, I, you know, saw how they were doing their lighting, or how, you know, how the music sort of sounded, and this is how it impacted my work later on. You know, I started doing lighting a different way, or in a similar way to this, or, you know, I started, you know, writing new music that was a different genre from the one that I was doing before. You know, as long as you can show that sort of connection there, then there shouldn't be a problem.
Excellent.
Yeah.
Now, I'm actually just going to jump in and answer one on behalf of Caroline and myself. But don't worry, Emma, we've got loads more for you. The question was that they think APRA AMCOS takes about 18% out of all revenue and royalties in operating costs. And can a member claim back that percentage on their earnings? Currently, that cost isn't recorded on the APRA AMCOS tax statements. So first of all, we take 13.8% as our admin fees, and we work pretty hard to keep that expense to revenue ratio really low. The reason it's not detailed on your statements and things is because it's not deducted from individual income. It's taken from all of the licensing fees that we collect from venues and streaming services and TV and radio. Everyone that holds a license, that's actually where that deduction is made. So yeah, just wanted to jump on that one. But Caroline, do you have some more questions here? I'm seeing that we're just getting flooded.
There are so many, and I really do apologise for everyone who's sitting there waiting for their question to be answered. We probably won't be able to get to all of them. I'm sorry. We so appreciate your enthusiasm here, and I do think it would be great if you really want your questions answered. Then perhaps, as Nikki said, we can, if we have your email address, we can try to answer that question, or send us an email. If you send an email to writer@apra.com.au and say that it is a question about this session, we will get the answer for you. So writer@apra.com.au, we'll get the answer for you. There was one question that I thought was maybe a good way to wrap it up, and now I can't find it. Claire had asked a good question. Do you have any general advice, Emma, on the best way to keep all the records of your income and expenses so it's easy to do your tax return at the end of the financial year?
Absolutely. So depending on how snazzy and how organized you are and how you want to be, there's a couple of ways of doing it. So, you know, the very sort of basic level is having a separate bank account for all of your business activities. So all of your income goes into there, all of your expenses go out of there. That way you've got one, you know, spreadsheet, or one, you know, one document there that says, okay, this is all the income that I've earned. This is all the expenses that have come out. The next sort of level is having a spreadsheet. If you're spending, you know, if you've spending money from multiple bank accounts or things like that, you know, you're able to sort of go, on this date, I purchased this thing. It's a, you know, on this date, I purchased a guitar. It's a piece of equipment. And then by the end of the year, you've got everything summarized. You can just do nice big totals down the bottom and then send it to your accountant, who will go, oh, thank God, you've already put it in an Excel for me. All the information's there. Doing your tax return is going to be so easy and so simple. The next sort of level up from that is, you know, having a dedicated accounting software, whether that be something like Xero, which is what I really like, QuickBooks, MyOb. There's one called Henry, HNRY, which apparently is very good for sole traders as well. And having that accounting software will allow you to be able to link up your bank accounts, and you'll be able to sort of code everything within that software so that you can just pull a report at the end of the period saying, okay, this is how much profit that I've made. And you can send that to your accountant, and then they can prepare the tax return from that. If you're only having a couple of transactions every year, then probably not necessary to get the full-on accounting software. But if you're a musician and it's your full-time thing, and it's how you make your money, and there are a lot of transactions, then it can be really worthwhile investing. Often I think 100% of the time it'll be like a subscription, so you'll pay a monthly subscription to those softwares. It can store all of your receipts for you as well. They're really, really good. You can invite your accountant to them so that they can dig around and answer their own questions rather than sending you a list of a million queries. Yeah, they're really good as well. But yeah, like I said, depending on how many transactions, having a spreadsheet with all of your income and expenses that you can total up at the end of the year is really handy. If you're, got a lot more transactions, then, consider getting an accounting software.
Fantastic. Also, I was a bit late posting the link to the tax pack for musicians, which Generate have created with Music New South Wales. It's a great resource. It will help you. So as much as we've sat here and Emma has imparted all of her wisdom, go back and review that fantastic tax pack, because it will probably answer a lot of questions that you have beautifully and in nice, simple, easy to understand terms. To use your services, perhaps we'll send out a link to everybody, just with links through to Generate, so that you can contact them if you would like to use their services. That would be great. They clearly know exactly what they're doing when it comes to working with creatives. You have been so helpful. I am very sorry, everyone whose questions have not been answered. Please do send us an email, and we will answer them for you. Emma, you know all of it, and you've been amazing. Thank you so much. It's really, really helpful. I also just wanted to say a big thank you, because all of AMIN organisations have been a part of this session as well. And so that's Music New South Wales, Music Victoria. I'm reading because there's so many of them. Music New South Wales, Music Victoria, MusicSA, QMusic, MusicACT, MusicNT, and WAM. Thank you, everyone involved in all of those fantastic organisations, to be here. Please come along. We've got another insight session coming up in a couple of weeks' time. Same kind of thing as this, and it's about resources around legal. So we've got, same as Emma, who's clearly an expert in tax. These will be experts in the law, and will be a really great session. So the link has been posted in the chat. I think that's everything.